Yes, sir.
Okay, liquidity moves the market, if you agree with me. So if we are trading liquidity that moves the market, now we need to understand the direction of the market, which is the structure. So now let's take, for instance, in this example here, like this is a bullish trend. How do you know that the market is going to reverse? Right? Now, a lot of people, you hear people say, I trade SMC, I trade support and resistance, I trade this, I trade that. Right?
Yes.
Now, let's take, for instance, this is support. I mean, this is a resistance. And,
Yes.
and this is support. Let's say support and resistance. Now, how do you know that the market is going to reverse? Now, whenever a market wants to reverse, you start noticing weak rejections, or let me delete this thing. Let me delete it and let me bring it here. Now, let's say the market is going like this. It has gone here, came back here, and now it has broken out. It came back here and is going back up. Now, to know if the market will reverse, you start noticing weak rejections here, like you start seeing the market do something like this. That's what we now call change of character. Right?
Yeah.
I'll take it to
Yes.
this chart. Now, if you notice, I said we're going to buy this market yesterday. This was about 100 and almost 110 pips yesterday. Now, I expect overall, I've done my analysis. I've said, okay, this market is a bullish market. So how do I know that it's going to reverse? Now, take for instance, before this market here was a pending order. It was going, a lot of people were buying. I would have taken this trade, but I didn't take it because I was not around. I was not available. I was not on my chart. So now when I started noticing rejections, I said, okay, this market is changing character. You now scale it down to the lower time frame. Sorry. Okay. Now at this point, you now notice that this market, you can see it clearly now, right?
Yes.
The market has created different rejections. The market didn't break this point. Now I don't trade support and resistance, but I want to break it down in a way you will understand, right? Now the market, let's say this is the resistance at this point. We can see that market has refused to break this zone.
Yeah.
Now, market came to this point, he rallied up, rejected, tried as much as possible, rejected. Now at this point, I said two things move this market. Liquidity moves this market, and this is what we are trading basically. And structure. Understand structure and know where liquidity lies. Wherever liquidity lies, liquidity is where money lies. So wherever money is, that's where the market is going to tap into first. Regardless of the trend or whatever, wherever there's money, that's where the market will tap into first. And now take, for instance, a lot of people like trading gold. It's not because they like trading gold because it's because gold gives you more money fast. You see it spike, one spike, you're seeing about $1,000. You're like, yes. You get, we are in this market because of money. So now take, for instance, everybody is after what they will gain, their pocket. So this market guys, they are here like, okay, liquidity is resting at this point. It will be stupidity for them to keep moving. So they want to sweep out the liquidity and come back down. Now, take for instance also, you see this market is going back up. Reason because it is going to sweep out. It's going to sweep out trend line liquidity. Now we have different types of liquidity. We have trend line liquidity, one of those liquidities, right? Now it's going to sweep out trend line liquidity. Tap into this. It's possible it will tap into this and start selling again. Now, having it has swept out this liquidity on this place. People that are buying, let's say scalpers. You know, a lot of people will start buying at this point. Let's say here, a lot of people will start, but maybe let's say they buy at this point and their stop loss. If there are people like me that don't use big stop loss, I hate to use big stop loss. Let's take for instance, they use about 5 pips for this. Now at this point, all their stop losses at this point. I don't know if you're getting me.
Yes, I'm getting you, sir.
Now they'll put their stop loss at break even, right? Now, as they've put their stop loss at break even, everybody at this point, the market is still going up. Some people will take partial, some people will close half of it and leave the rest at break even. Now, this market has come down here again. Now, if you notice, this market is trying to range. It has gone up, came down, gone up, came down. It has gone up. It's coming down again, right? So at this point now, liquidity is resting at this low part, at the lower part here. There's less liquidity at this top because the only liquidity we might have is just 1, 2, 3. So now we have about 1, 2, 3, 4. So the market wants to take out the liquidity here first, right? It wants to take out this liquidity before it continues its movement. I don't know if you get. And now one thing that the market does to us as human beings, it plays with our psychology, which is it gives us plenty, knowing fully well that we will get greedy and not take the one we have. You get. Now the market has given you let's say $500. And you're like, it go move. Yes, you're happy you're making money from the market. But guess what? The market will now come back, reverse against you, take its profit and take your money. And now you're now asking yourself questions. What is my offense? You get. So now to know where the market is going to change character. Now we'll go like this. At this point, the market has given us a week. We've seen liquidity here. Now, change of character. A lot of people mistake change of character for break of structure. Most people call change of character break of structure. Now, break of structure, that's where you see BOS. You will see some people in their chat, you will see BOS, you will see CHOCH, change of character. Now, a lot of people interchange them, but in actual sense, change of character is when the market is in an uptrend and you see it changing direction. That is just the change of character. So when you start noticing a market reject at a particular zone, you know that it's either trying to build up liquidity or it's about to change character. So at that point, you match break. I don't know if you're understanding me.
Yes, I'm understanding.
Okay, so if you have any other question, I don't know if I've answered your question though.
Okay, I've answered the question.
Have I answered the question? You're okay?
Yes.
Okay, if you have any other question, just shoot the question, ask. Today I want to answer questions on anything, both psychology, any question, anything you're facing as challenge. I want to answer all your questions. I want to not just you, everybody on this live session.
So
ask a question. Anybody that has questions should ask.
Okay, I have a question.
Sorry, who is speaking? Let me know.
Felix.
Oh, Felix, yeah, Felix, yeah, okay. Felix, shoot your question. I'm listening.
Like now, this supply block order and demand block order is a kind of confusing me at times, where to actually draw the supply block order and the demand block order. Okay. In one of the material I'm using, the material says when you have about the consistent 3 momentum candle, then where that momentum start from, probably a red candle or a smaller candle before that movement, mark the lowest and the highest. That is the lowest, the weak, and the down distance and the upper distance.
Yeah.
That's when you will draw your rectangular bar, serving as the demand block order. Then, when the market go up, after that 3 momentum candle, it will definitely come back to that move of that before it continues. That shows that 3 momentum candle is the time the big boys, that is the banks, the
God
big
bless you.
banks,
Yeah.
enters into the market. So they move it a bit, it come back to where they took it from before it starts going up. But
Yes.
in some of my chart, this thing do confuse me. I will see the first three momentum candle.
Yeah.
Then it will revise, not to the, it will not reach the level of where the movement started from.
Yes.
Then it will keep up.
I'm hearing you.
Then after going that up, it will still create another three momentum this thing again. So in this scenario now, where am I to draw the supply, the demand order block? Is it the very first beginning or the second this thing that it has created?
Okay.
Let me try send a screenshot of something to you of this.
That's fine. No problem.
So,
That's fine.
so
Okay,
that is
now let
what
me
is
answer your
confusing.
question. Right? Felix, are you there?
Yes.
Okay. Now, don't get confused. You know, one of these things in this market is a lot of people have different names for different things, or it means one thing, right?
Yes.
Now, I would use three languages to explain one thing. Now, I'll use English, I'll use French, I'll use Yoruba to explain to say three things, right? And now in English, I want to tell you I'm hungry. I'm saying I'm hungry, right?
Yes.
Now in Pidgin, I will say Ade H.
Yes.
Good. In Yoruba, I will say Ebinkpami.
Yes.
Good. Now in French, I will say J'ai faim, right? I'm hungry. All these three, all these whole things I'm saying, it means one thing, I'm hungry. It doesn't mean how I put it, it doesn't matter how I put my mouth, but I'm trying to pass a message to you.
Yeah.
Good. So now this is, take for instance, you're in a market, right?
Yes.
The first momentum you are seeing in the market, bam! I'm telling you straight up, that's an introduction that the big boys are actually there,
Yes.
right? That's first thing. Before you know that there's money in your account, what do you get? You get an alert on your phone.
Yes.
You just see a notification, bam, and you're like, oh, it's up to you to get happy or not. It's not most times you see when you get an alert on your phone and you start spending immediately, you waste that money most times. If you don't plan, I don't know if you're getting me.
Yes.
Now, the market, the big boys has actually come into the market, and they've shown how do you know that they are around? Is by the candlesticks. This is why candlestick formation also is important, right? Let me see if I would see an example so that you understand this thing.
No. No, you never even come yet.
Let me see if it will.
How come you don't they go?
Let me see.
So you they do. And they know
see.
the blend relationship well.
So let me see if it will. Okay, for instance, now let's say this one, this candle.
Enter and then go.
Are you there?
I get plenty cartoons one download. Whether you go copy.
So this particular candle, for instance, the big boys are saying they are in the market. So how do you know that these guys are trading billions, not even millions? They are trading billions of dollars, right? It's not your $5,000. It's not my $10,000 or my $50,000 that is moving this market majorly. Take for instance, $10 or Dangote or Obi Kubana, right? They come here. How do you know that they have? How do you know that they are around? You feel their presence by either the way their convoy is not by your Mercedes, is not by your Mercedes Benz C-Class AMG. I don't know if you're getting me. That you will know that these guys are around. So now, how do you know that these guys are around? Is by the candlesticks they print. Now, for instance, this candle that has gone up like this, that shot up, this particular candle, this one here. Let me get my marker tool. I'm coming. Where is it? One minute, please. Now, this candle here, this one, they have shown you that they are in this market. Most people will call it imbalance, right?
Okay.
Good, because there's a space that is supposed to be filled. Now, these boys have shown you that they are here. A lot of people that trade breakouts, we wait for the market to come back down, which I'm telling you, strategy, right? I can't say my strategy is the best. It works for me. My strategy might not work for you. It's based on our psychological capacity, right? Now, take for instance, you take your you trade breakout. Now this candle has printed out this thing, and now you want to enter your market here when it comes back down, because if it breaks out, it will test here again and start shooting up. It is still correct because he won this trade, but I'll tell you something. I wait for the market to come back. I am that patient. That is my strategy. I wait patiently, right, for it to come back. That is part of it, right? The edge strategy allows you, you will need patience. You might miss trade though, but I'll tell you, you have leverage to trade at, in fact, you catch like 1:15. You'll be catching big pips, right? So now these guys show you that they're in the market by the candles they print out. So, and also do not mistake, it can happen in most cases. We can see an order block and a demand zone, which is a support. You can see it. You can see another block printed in a demand zone. All these things are just signs. They are just puzzles you need to put in place together, join it together, and you now have a strategy or a confluence to take that trade. That's where your planning comes in. That's when you now plan. You say, okay, this candle is going, and this market is going to go up, it's going to go down, it's going to be like this. I don't know if you understand me.
Yes.
I'm going to in my mentorship, I would explain it better. I wouldn't want to waste time because of other people. But I guess I've answered your question a little bit.
Yes. So this thing now, the first momentum candle it printed, I will have to wait for it to come back to that level.
Depending on your confluence, confluence I mean is, what do you join together? What are those things you join together before you take a trade? That's what I mean by confluence. Now, also, depending on your strategy, you get. I'm just explaining things in a lay term so that you would understand. That's why I used that example. But in my mentorship, I'll teach you guys how to all those things. I'll teach you guys the edge strategy directly. Is that fine?
Yes, sir.
Perfect. So who else has who else has questions to ask? You guys can ask me questions. You can, if you're shy to talk, you can send out your questions in the chat box. I want to just answer you guys' questions here. I want to answer your questions, and yeah. So you can send out your questions, send it in the chat box, or turn on your mic and ask your questions. We're good. We're one family, and the goal here is to see all of us profitable, right? Is to have a profitable community. It won't make sense that I'm the only profitable person in this community. So I want us to all grow. I want to see you guys grow also. So you guys ask your questions. Feel free. I'm not charging anybody for this live session. I'm not telling anybody to come and give me money to host live sessions or anything. Hell no. I mean, I make money from the market, and so I want to see you guys progress. So ask me your questions. Let's go. Can you hear me? If is somebody talking? I can't really hear anybody talking. It's just coming in and going off. So it's just coming in and going off. So
Hello, sir.
yeah.
Like what? Which candlestick time frame do you think is best to use when analyzing?
Okay. We have just like, I'll answer this question. I'll answer this question fast because we have limited time right now. So we'll go and we'll do what we want to do. We have like, I should answer this question in the next 5 minutes so that all of us on this live session will actually go and do what we want to do. So, okay, time frame to use and analyze the market. Personally, I like going from the higher time frame to see things clearly. Right? Take for instance, you want to see something far. What do? You climb a stool. So the higher time frame is what we call the pairing time frame, and I like to see market from those higher time frames first. Now scale it down to the lower time frame so that I can get my entry. So you can start from the 4 hours. You can start from depending on the kind of trader you are. If you're a swing trader, if you are a position trader, if you're a day trader, depending on the kind of trader you are, right? It's important. I just start from higher time frame, scale it down to the lower time frame so that I'll get my entries right. So any other question? Any other question, guys? Or in absence of question, I would want to say a very big thank you to you guys for joining this live session. It's always a superb moment to see you guys come on these live sessions whenever I host it. It's actually very superb, and it's a thing of joy to see that my efforts are not being wasted. It's actually a thing of joy to see that my efforts are not being wasted, and I get to host live sessions and I see people turn up. It's actually very superb, and I want to say a very big thank you to you guys. And you guys are the real deal, man. Shout out to Shegun. Shout out to Daniel. Shout out to Danludi, Prince Will, Felix, Solomon, Ogbonnaya, Joseph. Shout out to everybody on this live session, man. I just want to say a very big thank you to you guys. Sincerely, I really don't take this for granted. So until then, I want to say peace out. So feel free to message me if you're having any challenge or anything. Feel free to message me. Send me your message and everything you want to ask me. So take care, guys. Until then, we'll see you guys next week. We'll be having our live sessions on Monday so that we'll see what the market is telling us ahead of time. All right, guys. Take care.